What's up, everybody? It's Weston Means with eXp Realty once again here in the East Bay area. Today, I'm here to address some of the concerns that I've been hearing in the market. Actually, I've heard this question a few times over the last few weeks. Essentially, are we headed into a major economic downturn, and will this cause home prices to go down significantly over the next few years? And I think this is a very valid question. Obviously, when we think of any kind of recession or economic downturn, we automatically go back to thinking about what happened in 2008 with the major financial crisis, home prices plummeting, which resulted in a lot of people, kind of getting the short end of the stick. A lot of people did get a lot of deals during that recession. And so, this is a question that's on a lot of people's minds, especially at a time like this. So I wanted to address that. I wanted to go into, what my predictions are, but as well as kind of analyze what some other analysts are thinking in the market and kind of what conditions are affecting what's going on in the market right now, how those factors may be similar or different to what happened in 2008. So let's get into it. So it appears to me there are two major camps of thought pertaining to this question. The first being that we're headed towards a soft landing, which has been named by a lot of the financial institutions out there. Essentially, the thought is that home price growth is going to slow for a time, but won't necessarily go down just because demand is most likely going to stay pretty consistent. A lot of companies are in a healthy position right now. There's probably not going to be a lot of layoffs. So a lot of folks that bought over the last few years are going to continue to be able to afford their homes and won't have to foreclose or anything like that. Now, the other camp has more of the thought that we are headed into a major economic downturn. A lot of companies may end up having to lay off some of their employees, which could lead to a lot of folks that have bought recently just not being able to afford their homes anymore, which could lead to a lot of foreclosures. Supply will go up in the market, which will inevitably drive prices down. And so those are the two major camps of thought. I tend to find myself right in between those two camps of thought, but I'm leaning a little more towards a soft landing scenario. And the reason for that is that I'm in the market every day and I work with a lot of buyers and sellers. I'm finding that a lot of first-time home buyers especially have been driven out of the market just because they were already at the top of their affordability, and because of the rising interest rates, they've just been priced out of the market. They can't afford to buy anything except maybe a condo, which comes with high HOA fees a lot of times. So those buyers have been driven out of the market. But there are still quite a few buyers that are now seeing an opportunity, especially when we compare the market conditions from this year to last year. Last year buyers would have to waive a lot of contingencies, a lot of times all of their contingencies, and just take a huge risk and bid up a home very high just to get a home that they weren't necessarily in love with. The conditions today are such that a buyer can find a home they really like, and they can come in and negotiate on price, and they can ask the seller to fix some things before they purchase the home. In fact, the last two offers that I got into contract for two of my clients, they didn't even have to offer above list price, and we weren't up against any other competition. So it is a much easier market to be a buyer. Bidding wars are no longer as common, but the question still remains, is it a good time to buy? And I want to preface this by saying that I think the market is extremely difficult to predict. Economists that are tasked with the job to predict what the market may or may not do are wrong all the time. And it's because the market depends on so many different factors, and there are just some circumstances that can't be predicted. And so it's very hard to predict, but we can look at certain factors that are very much different from what they were before 2008. And so I think there are two major factors that we need to consider. The first being that The last major housing crisis, it was due mostly to the fact that a lot of loans were being given out to folks that weren't really well qualified. A lot of buyers that probably shouldn't have gotten loans got loans. Lenders at that time were not really diving deep into the financials of all these buyers. They weren't really well qualifying the buyers before handing out the loans. And so a lot of buyers that probably shouldn't have got those loans did, and then inevitably they defaulted on their loans, which caused a wave of foreclosures, which drove up supply, which inevitably drove prices down. Something that is a lot different this time around is that lending practices are a lot more strict now. Before a client can actually get pre-approved, they have to have all of their financial accounts checked by the lender. The lender has to send that to underwriting. They have to really dive deep into those documents and make sure that the buyer can actually afford the home. And, sellers will typically not accept an offer unless they have a full pre-approval. So the chance of something like that happening again is very low. More than anything though, I feel like at a time like this, despite all of the predictions, despite all of, the ideas of what may or may not happen, I think the more important questions to ask are the reasons behind why we're looking to buy or sell at this time. So like, for example, if you've lived in the same home for several years and you've been wanting to make a move for the last 5-10 years, but you've been waiting for the top of the market. I think honestly, we've already missed the peak of the market, but at the same time, homes are still selling for higher prices than they were last year. And over the last 2 years, we've seen unprecedented growth in prices. And so even though you may have missed the top of the market, you can still sell your home for a higher price than you would have sold it even just a year ago. And in my mind, that's a win. You're at a point in history right now when you can do that. That's a win. You're getting a high price for your home, and it will give you the ability to either buy another place in the near future, or you can just hold on to that money for a bit and see kind of how this whole thing pans out. And then there may be an opportunity when prices actually go even lower, and you can really get a deal with that money that you got from selling your place. On the other hand, if you're a buyer, like for example, one of my buyers that just got into contract recently, he had a lease that was ending the 1st of August. And so, we were able to get him into contract at the end of July, and it was pretty perfect timing because he's going to be able to move into his new place right after his lease ends, and he won't really have to rent out another place for very long. And his reasoning for buying was simple. He was tired of throwing money towards rent, which pays down another person's mortgage rather than your own. And he had a pretty good amount of cash that he was able to put down, and so he could keep his monthly payment manageable. He was also able to use the Eagle loan program by First Republic, and so he secured a 3.79% interest rate, and that's going to be his rate over the length of the loan. And if interest rates go below that at some point in the future, he'll be able to refinance into a lower rate. And so I hope this helped you guys understand a little about what's going on in the market. I know it is a very uncertain time economically, but at the end of the day, I think we need to ask ourselves the questions on, will I regret if I didn't buy a home right now when I could? Or do I have the ability to wait and see what pans out? If your answer to that question is the prior, then it may make more sense to try to get your foot in the door while you can. There's no telling how long this type of a market is going to last. What happens in the market really depends on what interest rates are going to do. And at this point, it looks like the Fed is going to raise interest rates maybe 1 or 2 more times this year, which could result in more buyers dropping out of the market. And so I actually think in the coming months, it's going to be an even better time to buy. But then it's kind of unclear what's going to happen with the economy. If we're headed into an actual recession, what typically happens is that the Fed is going to decrease interest rates again at some point, which would benefit the buyers that bought now because they'll be able to refinance into a lower rate. What that is also going to cause is all the buyers that were sidelined by the rising rates are probably going to re-enter into the market, which will likely drive competition up again. And so those are my thoughts on the market. I'm not going to claim to have all the right answers, But from what I've seen a lot of buyers exit the market because of rising rates. And I think, if this is going to be a recession, that rates are going to be lowered again at some point, and those buyers are likely going to come back. So as always, feel free to get in touch with me if you have any questions or would be interested in any data on any of the local markets here in the East Bay. I serve all counties in the East Bay, as well as Marin County, where I used to live, and I also do some business in San Francisco. So if you're looking for any place in the Bay Area, even if it's in the peninsula, I have teammates out there who can really help you out. And so feel free to get in touch anytime. I'll have my contact info below. And please feel free to like, subscribe, and share if you found this content helpful. Take care, guys, and I hope you have a wonderful, amazing day.